Patrick to fire the salvo. What is the digital financial service marketplace like?
First, when we look at it globally, there's about $6 trillion of income earned by people that are outside the financial system globally. This is information from a 2017 report of PricewaterhouseCoopers, PwC. If we come to Nigeria, the number in terms of people excluded from the financial system varies from an EFINA report at 41% to the latest report on digital financial services by the Lagos Business School. It's at 48%. If we add the underbanked, which is put at around 10%, the size of the cake in terms of those that are yet to fully participate in the financial system in Nigeria is closer to 60%. Now, when we look at the supply side, starting from the IFC has committed to supporting bringing 1 billion out of the 2 billion on the bank globally into the financial system by 2020. You pick the IFC, first is the World Bank. The IFC is committed to bringing 600 million of the underbanked or unbanked into the banking system. You pick a Pan-African group as EcoBank has committed to bringing 100 million people into the financial system by 2020. When you look at this opportunity and you look at Nigeria, where there is the opportunity to bring in about 40 million people into the financial system, and you add the existing inefficiencies that the current participants in the financial system experience. So we're seeing introduction of the likes of scan and pay technology, which last year in Nigeria, M-Visa, MasterPass, and our own NIPS introduced M-Cash. These are scan and pay technologies meant to bring easy payments, easy receipts to the nooks and corners of the country. The enabling environment itself is getting much more interesting. The regulators at various levels globally and in Nigeria are showing keen interest. I know that there's public debate about whether Bitcoins should be accepted or not, cryptocurrencies, but before we get to the more exotic, at the basic level of acceptance, where most of the competition, the key competition actually is cash. And why is cash accepted?
Let me interject there.
Okay.
You've given us the global market space.
Great.
We'll come into the issue of the regulation, the cryptocurrency, and all the rest as we proceed.
Thank you.
The rate at which we have people excluded, and with the PwC report that you have quoted, and the 40% of the financial services business stands a risk. Now, let me ask you, Ade, how will you want to, just like the minister told us that Nigeria is a space where we will improve, we need a lot of fintechs. The adoption rate of fintech into financial services, how would you want it expanded?
Part of the enabling environment has to be very clearly understood. Number one is that we're quite fortunate to have leapfrog in terms of telecoms technology, and we have a very high penetration of broadband. That is a very, very interesting enabling environment. Number two is that the advent of cloud technology has made access to huge computing power and number crunching in terms of data and analytics very, very exciting as well. When you add these two together, it then means that the ability of the traditional financial services organizations, which are quite static in terms of branches and core, to reach huge numbers, and the ability of our traditional methods of, if you like, marketing campaigning to reach these huge numbers in a manner which they really want to relate to, yeah, is very, very different. So now you're talking about leveraging technology at a scale and at a pace that we've never seen before, really. And here is where fintechs come in. Because fintechs, by nature of the way they think, by the fact that they don't carry huge legacy systems and costs, by the fact that technology has moved on and has enabled them, allows them to innovate very, very quickly and start offering compelling solutions at very, very low cost that can actually bridge the gap between those who can afford and those who can't afford. And that's how you bring this acceleration together. And we've started seeing that in a number of areas. You know, the obvious areas is in payments, as it were, really, where a lot of fintechs dominate. And I think as we go on that way, you will see that fintechs will continue to provide things like mobile wallet, digital payment methods, as it were, really, and expand further into areas such as know your customer, because how do you mass enroll?
Let me ask
number?
a question there. You are talking about know your customer, but in terms of consumer experience, currently, are there prospects and challenges? And of course, what should the stakeholders in these in the financial services be doing to really improve on that consumer experience?
Okay. In terms of customer experience, there's no question about it that the adoption of fintech technologies by incumbents, i.e. banks, and indeed the fintech companies collaborating with banks has actually improved our customer experience, in my opinion. Because, you know, if you take the customer experience of doing business in banking, for example, literally 5 years ago, you know, the queues are still there, but not at the levels they're there. You know, there's so much more you can do without going to a bank using USSD and all of that. But fintechs alone can't do it. Yeah, the prospects of fintechs just being able to disrupt that ecosystem won't just happen, because people won't put their money, or let me put it differently, people will put their money in institutions that they trust. Trust is a relative thing, but people will trust the bank more than, if you like, Adebayo or fintech firm, as well. Really. So it's all a relative thing, as well. So banks still have a critical role to play, because there's still the risk issues, there's still the compliance issues, and all of those. And, you know, the challenge is about making sure that fintechs understand space they can play in very, very well, and they understand the opportunities of how to collaborate within the financial ecosystem and provide unique value. And a lot of the fintechs are doing that.
Ike, can we actually say that the digital landscape is maturing or is at its infancy stage? And taking a look at it from the African context and then Nigeria situation.
In innovation, what you find is obviously there is disruption, and then there's the incremental part. What we have now, it's no longer disruption. The foundational infrastructure has existed. They're no longer new. They're no longer transformational. You're looking at your SMAC stack. SMAC stack. SMAC stands for social, mobile, analytics, and cloud. These are no longer new, literally. So my fellow panelists have spoken about the readiness of the market. Everyone understands, everyone knows now what to expect. So you have organizations offering digital everything, but what you find is we're not there yet. What you have is the incremental type innovation. So the first guy who comes out first will say we are the first, but we're not there yet. What you find is everyone who comes after them would be that much better than the previous person. So when we arrive there, what we will have is where you'd have an ecosystem that exists in a community sense. So you have everything being done. Right now, everyone talks about payment. When you talk about fintech, it's about payment. Digital, it's about payment. We will come to a point where payment becomes almost totally de-emphasized. Look at what Amazon's doing right now. I think they call it the walkout initiative, where literally you walk into a store, you pick what you want to buy, you walk away. You're not having to worry about payment or anything else. That's where we're going.